Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Monday, the 10th of August. Let's have a look at euro dollar, where euro has started to come back a little bit, following on from this sharp rally that we saw throughout July, a really strong rally, over 700 pips. But since then, in the last week or so, we've started to see some cracks forming in that rally, and the payrolls report on Friday really did start to induce a bit of profit taking, and that profit taking, although despite a bit of early consolidation today, has started to come back in again. 30 pips down at the moment on today's move. Quite a strong move to the downside on Friday, has broken this initial uptrend, and it's only an initial one in the fact that I've been drawing successively sharper uptrends or steeper uptrends in the last few weeks as the move has accelerated higher. That initial breaking of the uptrend, though, is certainly a warning signal, and the fact that the market's pulled back from 119.15, didn't really get much beyond sort of 5 to 10 pips above the resistance before falling over on Thursday, and then falling over decisively on Friday. Look at these momentum indicators. There is a bearish or negative divergence on RSI. There is now, if the market closed where it is today, there is a bear cross on MACD lines, and also looks like the stochastics are in the process of rolling over as well. Now, this less steep 4-week uptrend is now being tested as we speak, and you'd be looking at Friday's low, I think, and if you closed below Friday's low, I think that is a real sign that the market is starting to sort of go into a little bit of a reverse mode, a little bit of possibility of a top pattern, was essentially in a 200 pip band between 1695 up towards 119.15. So what's that, 220 pips? And I think that market, you'd take that as a range at the moment, but given the fact that you'd be then posting two fairly considerable negative candles in a row, you'd be starting to build some negative and some corrective momentum. So that support at 1695 comes right into focus then as to possibility of a top pattern. So how the market responds in the next day or so is going to be interesting. We saw the payrolls report breaching that 118 big figure pivot line, this near-term pivot that has been created, and interestingly enough, that has become a basis of resistance today. So it is clearly a level that the market is looking out for, but it is starting to generate less positive, or certainly maybe even corrective momentum on the hourly chart as well. So anything towards 118 figure is a bit of an initial sell, and as I said, 1750, 1755 initial support. If that gets broken, then we could look towards a correction. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.